Trump comes in, the drawdown starts. Then all of a sudden they think, oh, he's not friendly towards nuclear power. There's nothing. I mean, everything they say, the Department of Energy secretary is there. So you've had this conflated view that started with that, and it continues to be pulled back. And so companies, right? Companies are sitting there dealing with this when they're being drawn down. Their equity prices are going down. They might have been using some equity in a transaction if they were thinking about it, but it brings uncertainty into the market. Then you start to lead into the tariffs. And it's tough. Like, they don't know what's going on. Fuel buyers don't know, are we going to tariff? Are we going to get tariff for fuel that we buy, and where's it coming from? So the question as to why no M&A, I think it's still raw right now. I think this administration has created a lot of uncertainty, and I think that people just want to see where the chips lie. I still think there's some tremendous strategic transactions that would make sense, and if they do occur, then fuel buyers really have a problem.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and we are joined today by one of my favorite guests when the topic is uranium and nuclear energy. Mike Alkin from Sage & Co. is on the other side. Mike, as always, delighted to have you back.
Thanks, Lucian. Always good to be here with you.
Time passes quickly. It has been 6 months from our last interview. If I'm not mistaken, it was early December or something like that. So we have a lot of things to cover today. I would like to start with a lot of questions I got in that direction. Let's start with your models, Mike. You're one of the most systematic people in the space that I know of. How are you viewing the how are your supply demand models looking today? Have you changed them during the last couple of months, or how are they looking today?
Yeah, it's a good question, Lucid John. So we don't. So when we see things like, let's just take things that you might see on a daily basis, not daily, but weekly, monthly, whatever it might be. Company is getting a license extension, or a power plant is getting a reactor is getting an extension. So that we might see that. We might see an uprate. You hear about a reactor getting uprated, which will improve the efficiency of the reactor, which would add more fuel. You hear about getting approvals and new starts, right? And then there's closures too. The closures you kind of have an idea for, so we take those into account. On the reactor starts, when we see those, we don't run into the model and update those right away. And the reason we do it is the way we're geared to do it is when we see something that would pull from demand, we'll go and update it quickly. When we see something that we think is going to increase demand, we'll get to it. Because the way our model flows out, right, is we think we're right, that there are structural deficits that are significant. So it's not as though we're on the margin. That news flow that comes out is going to make a difference. And then, every few months we'll sit down and update it, probably quarterly. Sometimes a little bit longer than that, because we kind of know where it is. So that's on the demand side. Like you just saw recently, China came out and 10 reactors getting approved. That's the 4th year in a row you've had 10 reactors. So we know that we have every country. We have literally for every country, we have a line by line, reactor by reactor demand model. We'll get to that. But we're not running out and saying, we know the deficits are big and they're just going to get bigger, right? Because there's not enough supply. On the supply side, we're more fluid with that, right? Especially now as you're seeing a lot of the brownfield trying to get started again, seeing new mines trying to come online that are having trouble. It's been a real difficult time for anyone trying to bring supply on, especially the brownfield, especially here in the U.S. And And also, the costs in doing so are significantly greater than they had said they would be. And so we are pretty all over that pretty quickly, right? Because that moves the cost curve. And then, obviously on the cost side, we're looking at more than just what the cash cost is. We're looking at the all-in sustaining cost and total cost and all encompassing all the costs. And then, of course, there are those, potential new mines that are getting pushed far out to the right because just of normal stuff that happens. When you're talking big projects that could bring on 10, 15, 20, 25, 30 million pounds a year, a shift to the right of 2, 3, 4 years is really material. So, we're on it. What people might want to hear is what's our view on it. It hasn't really changed. We're still, oh, by the way, on the demand side, we don't include a single pound of SMR demand, nor do we include a single pound in data centers. Will it materialize on SMRs? I guess. We're not smart enough to figure out which SMRs will win and when they'll win. Again, we don't need it. Same thing with data centers. People like to get excited about it. Great. Maybe that helps them, but we don't need it. So that's kind of how it is. And we still see big structural deficits.
Yeah.
And by the way, those will range. I know people want to know. Those could range from 15 million pounds to 30, 40 plus million pounds. A lot of that has to do with how much enrichment capacity is available. And without going down a rabbit hole, right? Enrichment capacity plays a big role in uranium demand.
Yeah, let's touch on the supply side. When I see supply challenges, like you said, with news coming basically every week with missed productions, with future guidance revised, it reminded me of the movie about Apollo 13 when Gene Kranz from NASA Center asked people over there, "Is there anything left that is good on the spacecraft when the
Yes.
spacecraft blew up?"
Yes.
So where is the main problem here? Is uranium mining so hard, unpredictable? And shouldn't those kind of challenges alone take the uranium price to the moon?
So I think what you're seeing is, especially where you've seen the challenges, has been, let's take Niger out of it with a global, where,
Yeah.
you've had a coup. You take the Athabasca names up in the Athabasca, you've got NextGen where they're getting pushed out because of the regulatory, just, timelines, because of the dates they can get their hearings and stuff. But what you're seeing is really, it's been real challenge to do the ISR mining, right? Without doing a tutorial on mining here. You could do an open pit, which everyone would know what that is. You can go underground, or you could do ISR, which is, it looks like a gas drilling, right? Except you don't have the derricks. But you would, but it's proven to be really challenging, and it's proven to be challenging for new starts. It's proven to be challenging for restarts. You're injecting in the Western world, you're injecting a solution down into the ground, and you're having to dissolve the uranium off that rock and then bring it back up, and it's hard. The recovery rates are hard. You hear people say, "Oh, it's both art and science." It's a ton of both, and so it's difficult. The costs are greater than they thought. In the United States, finding labor is really hard.
Yeah.
Especially for ISR, right? So you're going out, you're competing with oil and gas companies that have been fairly steady work for these workers for a long time. So it's been a challenge. Recovery rates have been less than they thought. And costs, like I said, costs are meaningfully higher. Not a little bit, but a lot higher.
Yeah, agreed. When it comes to the companies, other than over-promised timelines, we have the cost models that are, I would say, in 90% of the time wrong. You have your company cost models, I presume. How much have you revised both capex and opex higher versus let's say, your original models, if any, of course?
Meaningfully. Part of when we started doing this back in 16 and 17 and studying the market, again, I didn't know the uranium market at all back then. But one thing that just stood out to us in just trying to understand the cost to produce a pound of uranium was, as we were looking at industry forecasters, we noticed that they were using a cash cost. And as you know, if there's way more cost than just the cash cost at the mine level, right? There's all sorts of other stuff. There's royalties and taxes and debt service and yada, yada, yada. You know that. When you're a pure play uranium mining company, you're not BHP. You can't spread the cost around, right? You're absorbing all that. So at that time, what we noticed was the cost curve being used was materially lower than what we thought was reasonable. And so if we thought the average pound was in the 50s all in total cost, now we think that's probably 40-50% higher in the ballpark, depending on the projects, right? So again, total cost, but you got to account for total cost. I'm not talking cash cost. So yeah, it's moved in our view quite materially. And when you look, you just have to look at the numbers. And obviously, when companies report, you see how people say, "Oh, the costs are high." Well, because they're not running at the capacity they can run at, and as they solve for that, that should bring costs down. But when you just look at the general inflation, if you're doing, you asked OpEx or CapEx, if you're looking for drilling rigs and you want to keep, and especially in ISR, you got to keep staying ahead of it. You're constantly drilling. Well, now you're competing with oil and gas companies, and so inflation. It's way more inflation than going to the grocery store here in the Western world.
Yeah, very good point. Mike, spot price. I know where you stand on the spot, but I would like to hear your take on certain things. Firstly, why isn't carry trading closing the gap between spot and term? I get that nobody wants to chase the price, but at the current prices, even if you chase it up with few dollars, you will make a good money on the carry, right?
Yeah, I think you do, and you're seeing it. Look, we saw spot had gone down to $63, and I think right now it's sitting around 67 and a half, 68, depending. There's different cutoff days, cutoff times. After the cutoff time yesterday, you saw one of the brokers price at 68.
Yeah.
So you're heading there, right? And the fixed price, term price as reported is $80. So I think you're seeing that. I think more recently, and let me be clear. I think what we see a lot of is some excuses made for why price doesn't do this. I think whether it's term price or not, we have to think about who's in that spot market, right? So if we look at the spot market, about 65-70% of that are physical traders. That's it, right? 14% of the spot market is utilities. Of all the pounds consumed in the reactors in a year, utilities, who are the only customer, the navies and whatnot, but for all intent and purposes, they're the customer, they're the consumer of all those pounds. 4% of what they consume is bought in the spot market. So to put some context around it, so now to collapse it, you do see them coming in. They're not going to come in like gangbusters because they know it's a very thinly traded market. And whether one wants to admit it or not, or chooses to say, it's spot's irrelevant, it's not irrelevant. It's irrelevant. It's relevant because it plays a psychological role. And so even though fuel buyers know most of what is long term, there's still a spot market out there and they kind of reference off each other. So there's some correlation. So they're not going to go in there and go gangbusters over it. And they'll peck away and they'll poke, and you are seeing some come into the market. And what I think that does is it provides a floor to the market. Throughout this whole time, though, you're going through pounds because there's pounds that are being sold, you're where's it going to go? I don't know the answer. We don't focus our time on that. Again, we have bought physical pounds in the past, so we see what's happening in the market, and it's a tricky balance for that, right? Because it's a balance of having to respect it, but not put that much emphasis on it. Where we put our time and emphasis on is really what we're seeing on the term price, which is at a probably 15, 17-year high.
Yeah, Mike, there has been a rumor about a certain entity selling 15 million pounds on spot market. What do you think of that? I know that you probably don't like to talk about rumors, but it has been present in the social media and among investors. So, what's your take?
In terms of a fund selling 50 million
Yes,
pounds,
yes.
yeah. Well, that there'd be one fund that would have that much. I, 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 I think that's wrong. I think some people who would like to see the price go down might have a different view of that, and they might want to comment on it differently. Structurally, I think that's incorrect.
Okay.
I'll just leave it at
Uh,
that.
Yeah, long-term market, your view, what are you seeing and hearing, and how long utilities can go without reaching a replacement contracting? 2025, 2026, beyond?
Yeah, I mean, Tim and Grant on the conference call this morning with Kamico, they laid out, I think it was 3.2 billion pounds by 2045, and that are uncovered, of which a billion two, nobody knows where the pounds are coming from, right? So it's a nice little package number to put around. But what you tend to see is people don't care about that. I mean, those are real numbers, right? But people react to more shorter term stuff. And so do the fuel buyers. And if you go back, and one of the things that we do in any industry we're looking at is you have to study history to know where you've come from and where to learn about where it might take you. And what we've seen is that in really studying very deeply the commentaries around prior price spikes, you kind of see what you had here. Oh, the next couple of years are covered. Well, no kidding. It's a 2-year fuel cycle. Of course, the next couple of years are covered. What utility doesn't have their fuel in process? They lose their jobs, right?
Yeah.
And and you'll hear it. But what we focus on is we go back to like the last cycle in '05 is when you saw it. If you looked in the first quarter, second quarter, the commentary coming out of the industry prognosticators was uncover requirements for the next 2 years are very low, and we don't expect to see anything. And what you actually saw was in '05, 250 million pounds be contracted, when in '04 they were like 60, 55, 60 million pounds. And 50, 50, 40, 60, all the way down from 1992 up until that time period. But what happened though is the rubber band was being stretched, right? Inventories were being drawn down. Inventories were being drawn down. Inventories were being drawn down. A missed shipment, a missed delivery, things start to get tight and they get overlooked. The same thing we're seeing here. Inventories have been drawn down. You've had since 2011, you've not been at replacement rate, right? So you've had massive inventory drawdowns. What you don't have this time around, Lucijan, is you don't have a megatons to megawatts program. One of the analysis we see that we think is very faulty is we'll sometimes see people lay out the U.S. utility, and the U.S. utilities are the biggest in the world, and they're the biggest buyer of this stuff by a lot. So it's a good proxy. And what you'll see is people will lay out a bar chart and they'll go and they'll say, oh, look at that. In 2005, inventories were a little bit higher than they are right now. And 2004, they were even a little bit higher than they are right now. And right now, they're about 2 years in the U.S. They'll say they were back then. They'll say they were lower than they are now. Now they're higher than then, right? So that's why it kicked off. We think that's a rather uninformed approach to it. Actually, more than an uninformed approach. And the reason for that is the U.S. uses 50 million pounds, 50 million pounds a year, depending on refueling cycles. Of that 45 or 50 million pounds, in that prior time period, they were getting around 20 to 22 million pounds a year coming in through a guaranteed megatons to megawatts program, the down blended nuclear fuel from Russia that was coming in. So if you were a utility, you knew from 1993 to 2013, you had 20 to 22 million pounds hitting the U.S. market that you didn't have to worry about having inventory for. It was kind of like a off balance sheet asset, if you will, because it was coming. So if when you add those numbers back into it, the material, so you say, okay, from 19 to 2004, 2005 through 2013, take that guaranteed number of 20, 22 million pounds a year, and now back it up to 2004. What did that look like? Well, inventories were materially higher than they are today. Yet in 2005, all of a sudden, out of nowhere, with all this on-cover requirements, contracting took off. Living and breathing in this market, we feel that you're just something away. And people often ask us, what's the catalyst? I literally have no idea. If somebody ever tells me what a catalyst is, I'm going to tell you that's not the catalyst because you can't identify them. We're looking for conditions, not catalysts. Conditions are what create catalysts. If the catalyst is identified, it's not, if the condition's been met and it's been priced in. So that's kind of how we think about it.
Yeah, when you mentioned the United States, do you believe that the domestic US developers and producers have any premium for being US based? I mean, considering all things happening recently.
So I think, you would see it. I mean, if you look at the spot price, there's three different prices reported. The U.S. has a little bit higher price, 50 cents a dollar, $1.50 from a storage standpoint, right? Do I think they are? No, I think it's been kind of glossed over because they've been really bad at producing uranium,
Yeah.
right? So they've had a really hard time at doing it. And so I think they've disappointed investors. Now, ultimately, who does that accrue to? You asked about spot market earlier. I don't know. If I just go and piece around, I think their number, I don't have it in front of me, but in all the what people were looking for out of these brownfields coming back online, I think it was like 7.5 million pounds, around that ballpark number. And what's actually coming is 3.5 million pounds. Now, in the grand scheme of things, not a big deal. But when I talked about conditions and what is it, it's that one producer, that one small producer that didn't plan for that and has to go find 3, 4, 500,000 pounds and has to start knocking on doors. And traders start seeing that and they start backing up. And all of a sudden, whatever little inventory they have starts going higher, right? So it's that type of stuff that we're focused on.
Mike,
You asked, is there a premium? I don't think so.
you don't think so? Okay. To your knowledge, how are we standing with the enrichment going from underfeeding to overfeeding? Do you believe that there is a convergent bottleneck?
I think that, I think people like to use the term underfeeding and overfeeding. I think most who use it can't even explain what it is. So you know what it is. But I think a lot of people say, oh, overfeeding, underfeeding. It's like what's Spot doing? Underfeeding less uranium, overfeeding more uranium. I think you're seeing what we're more focused on is what tails regime is it, right? So enrichment capacity, without really, I really don't feel like going down a rabbit hole on this, and you don't want me to.
Sure.
Less capacity, higher tails, more uranium. More capacity, lower tails, less uranium. You're trending in higher tails, less capacity, higher tails, more uranium. There had the price of SWU, the enrichment unit, separative work unit, has gone from 35 at a low to almost 200, and that has encouraged some capacity additions in France and in New Mexico. So you will see some coming on at the end of the decade, right? So. And just like mining, we know how capacity additions go in everything. So, I think the trend on tails is up. And I think that enricher inventory of uranium or UF6 is down, right? And those are, again, conditions because they too need to go out and buy uranium at times. So that's another force into the market.
Mike, the uranium equities, I got to touch on that as well. Could we see, I mean, I want to hear your take from the perspective of running a fund. Could we see a scenario like in gold, maybe, where we have all-time high price of gold without equities following? we are already
No.
seeing. I mean, it's a little bit different with uranium. But do you see that happening with uranium? Let's say spot goes to 150, or the long term price goes to 120, or I don't know where, and the equity is not following. That will not be the case in uranium.
No crystal ball.
Of course, of
I
course, of
have
course.
no idea. I
Your
don't.
opinion.
My opinion is people are fixated on price, not conditions. So if the conditions drive price, which we think they will, people react to that. And those can and you go through periods where you do have, you know, Liberation Day in the United States, April 2nd, right? It doesn't matter. For the next few weeks, it doesn't matter really what you're reporting, what if it was good or not. Your stocks were getting hammered in mass. So yeah, in something like that, risk off, tough to make any headway. However, when the market becomes a little bit more sober, when you're going through periods of bull markets and bear markets, what my experience just over 30 years has been, and certainly I'm sure I could be wrong, is the market tends to find things that are working, right?
Yeah.
What makes it trickier in uranium is what's working. We have to define that, right? Here we are. When I listen to the sell side analysts, almost all of them, I don't want to say all of them, but almost all of them, when you hear them ask a question on a group conference call that they might be hosting or on a conference call of a company, whatever it might be, the first question is spot. Okay, well, 80% of the pounds trade in long-term market. The long-term price is at 17-year highs, and your first question is spot? Like, what are you thinking? However, that's what the market's thinking, right? And that's what their clients who are calling them up are thinking, right? So you've got to kind of work through that. But I do think, like I said earlier, I think what to me, there's nothing greater. If anyone takes anything away from this, right? And what do I know? I'm just a guy who didn't even know what uranium was not 9 years ago, but and I'm certainly no expert. But in just looking at commodity markets for decades now, when the commodity prices, when volumes or demand goes down, price goes down, volume goes up, price goes up for the most part. In the last year and change, that's not been the case. The nuclear fuel buyers, and we could say they were focused downstream on enrichment, and we could say they were focused on conversion, which they were. But there's also a part of them that just really don't want to pay these higher prices because they could have paid 30 and 25 and they didn't. And now they're paying 80. And that's egg on their face. So they're going to kick and scream. They're not, even though it's a small portion and it's not that big a deal, and they don't get in trouble for paying whatever the price is because they need it. At the end of the day, pride comes into play. And for the most part, not all, but many of the bigger ones, and the big guys, most of them are fairly covered for a few years, but they're still paying higher prices. But last year, they went on strike in a sense. They contracted 120 million pounds on consumption of 190 to 200, and the prior year it was 160. Right? That was their way of pushing back, and they would have loved for the price, but the price went up almost 20%. So you tell me where volumes go down 30% and prices go up almost 20. What that's telling you is the economic productive capacity available to them. And think about how big Kazatomprom at 60 plus million pounds and Kamico all in at over 30 million pounds on a production of 150. Think about how disciplined they are, right? Yeah. So and when you're seeing so that to me is, I mean, that is where we get fired up. That's where we get excited. And but yet people are going to stare at the 20% of the market that bounces around in spot market. They are the utilities would love to break the union. I use that term. They would love to see term pricing come down, but it's not. And they would love to see, and again, the term price that's reported is only the fixed price. What doesn't get reported is the market related exposure, the collars, the floors and ceilings. right? Here we are. We had a $63 spot price. You heard Kamico this morning say floors are still 70. So your contract price is right now. It was funny is they cut out during the. It was a technical difficulty on their call, so
Yeah,
you can hear
sure.
the ceilings. But ceilings are, we know just from being in the market, are still quite elevated,
Yeah.
in the hundreds. So, yeah, there are certain, and again, it depends who you are as an investor, right? So if you're a retail investor or a personal investor that has, and time can be your friend, if one adopts the view that ultimately long-term prices matter and you will have drawdowns because people stare at spot, some can't, and I get that, right? It's nobody wants to see drawdowns, but they happen.
Of course.
If you're a hedge fund, if you're a hedge fund with a very short time horizon, and not all are, but if you are with that, you're focused on spot price, right? Because you can see what can move around real quick, and you could paint a story around that. But if you're in it for a little bit longer time horizon, these conditions are as good as you could find.
All good points, Mike. We have arrived to the part of the Q&A. I always have Q&A when I have you as my guest, so I have a list over here. The first question would be, give me a sec. Yeah, the first question. Any thoughts on why no opportunistic M&A happening with the recent dip in equities? No interest from big oil or even Kamico?
That's a really good question. And we think about that. The conditions are such where I think that could occur. I think, it should occur in some of these names. We're never going to know that, right? We can't know that. We are not going to know that. I think this drawdown, right? You're going to remember when the drawdown really started was when President Trump was elected. You started to see November, and you started to see a couple of things. So let's just think about what happened. The Russians, the Russian war is going to end. So let's think about the conflation that's taken place. The Russian-Ukraine war will end. Russia is going to flood the market with uranium. That's conflated fact number one. And give me 30 seconds to explain why. And when I say 30 seconds, it's not 30 seconds.
Of course.
But real quickly, the Russians have 40 to 45% share of enrichment, 30% share of conversion. That's the downstream. And they have 14% global market share of uranium, right? So what happened? The war starts. All of a sudden, the utilities went crazy and hog wild in enrichment and conversion because they were worried that would be shut out of the market. So you have that. But somehow along the way, when the war ends, all of a sudden people are now saying that they're going to dump uranium. So let's talk about their uranium. Russia has a big domestic fleet and an export fleet where they built reactors outside of Russia that they service and provide the fuel for. And so what do they do? When you look at the pounds that Russia produces domestically and through their JVs in Kazakhstan, and you compare that to what their demand is, it's about equal, right? So they're not net long uranium to be going dumping anywhere. Under the Russian suspension agreement, the Russians, which is it's every 5 years it will renew, and it's how much they can sell into the United States, how much enriched uranium. It's about 20% now of the enriched uranium into the U.S. can come from them. But what happens in that? As part of that document and the renewals, part of that, the U308 component they could sell is about 1.4 million pounds. But what winds up happening? They sell enrichment, enriched uranium to the U.S., and the utilities send back either U308 uranium or the converted uranium, UF6, to the Russians. They send it back. Why? Because Russians need it.
Yeah.
So there is no uranium coming into the market from Russia. So that's conflation. So that's the first thing. Trump comes in, the drawdown starts. Then all of a sudden they think, oh, he's not friendly towards nuclear power. There's nothing. I mean, everything they say, the Department of Energy Secretary is there. So you've had this conflated view that started with that, and it continues to be pulled back. And so companies, right? Companies are sitting there dealing with this when they're being drawn down. Their equity prices are going down. They might have been using some equity in a transaction if they were thinking about it, but it brings uncertainty into the market. Then you start to lead into the tariffs. And it's tough. Like, they don't know what's going on. Fuel buyers don't know, are we going to tariff? Are we going to get tariff for fuel that we buy, and where's it coming from? So the question as to why no M&A, I think it's still raw right now. I think this administration has created a lot of uncertainty, and I think that people just want to see where the chips lie. I still think there's some tremendous strategic transactions that would make sense. And if they do occur, then fuel buyers really have a problem, because consolidation could mean, if they were to ever to occur, mines you thought were coming at a certain time could get put into a pipeline that come way in the future that you're not going to have access to.
Yeah.
Conditions, right? Conditions. So.
Okay, let's move to the next one, and we have a lot of them to cover, so try to keep them in 30 seconds or 60 seconds, maybe. Yeah, depends on the question, of course.
Yeah.
Okay, the next one. How do you think that US volume will move in the next 5 years? Up some, up lots, down due to Russia?
U.S. volumes that demand, you mean?
Yeah, I presume that he meant that.
Yeah, I would think you'd have more, just because you've got a few more plants coming online. You've got support from the administration, money being thrown at it. Yeah, I would think higher.
Higher, okay. Next one, is spot likely to be significant player purchaser again like it was when it first arrived?
Doesn't matter. They were, if you look, and I don't have the numbers right in front of me. I put it in one of our recent commentaries to our partners, our investors. If you look back, spot when it first came out, the first couple of years, it was really impactful. But when you look at spot when it went, or a spot price, when it really took off in 24. 23, 24, spot was a very small portion of that. I'm not going to quote a number, but it was de minimis. Like, literally, I think they bought 5 or 6 million pounds out of maybe 30, 35 million pounds. I'm going to get the numbers probably a little wrong, just because I wrote that a few months ago, and it's just not fresh in my head. But it was when we put the numbers out there, and you really saw that and said, they really don't matter. It's psychological. And could they come in and pick up some pounds? Yes. But at the time, it wasn't a driver. And that took spot price, and spot price went up without it.
Yeah. The next one. What's Mike's opinion on the chances of removing obstacles to uranium mining in Europe, Sweden, Spain? After all, the EU is increasingly focusing strategically on critical raw materials. So do you believe, what's your opinion on the chances of removing obstacles to uranium mining in Spain and Sweden?
Anyone's guess is as good as mine. I don't really have an informed view. It comes down to politics, and anytime I try and figure that out, I get it wrong.
Okay, does Mike see any risk to the U308 demand side from significant technological economic developments in the enrichment sphere? For example, China building large enrichment capacity at significantly lower tails assays, or using MOX?
MOX is 6-7 million pounds a year. It is what it is. China's going to do what they do. But it takes years to bring enrichment capacity on. And again, where will they be by 2030? They'll have more enrichment capacity. But China's demand profile from a uranium standpoint is just accelerating like there's no tomorrow. So not particularly worried about it. Also, and I don't mean to be flippant on this, but when we're talking 2030, nobody cares. I mean, it's only 5 years, that's tomorrow. But investors don't, investors want to see things happening much more nearer term, So, saying like all these new technologies that are out there, stuff that's way on the horizon, people just don't. I know people want to say, "Oh, the market's discounted." No, they don't. They just don't. And so, I'm not overly concerned. I'm not concerned about that.
Okay, next question. When the utilities did flex up their contracts, did he or the price forecasters include these additional pounds into their models? Maybe that's the reason some utilities are so chill about contracting lately.
I think there was some flexing up. Yeah, there definitely was flexing up that helped. You run into an issue if you're flexing up with very limited supply out there. Where are you going to go? Those who have the commitments to the utilities might have to go source it elsewhere, which could put upward pressure on it. I don't think they're so chilled. I think they're they're busy. I think they're pissed. I think they're angry. I don't think they like the prices. Too bad. They tried last year to break that, didn't work. And I think that the flex up helped them, but that's in limited capacity that it's going to help them. They're running up against a really difficult time right now.
Yeah. Next question. Where can we find data on actual utility inventories each quarter?
Globally, you could read the public companies' balance sheets. It's tricky because they'll give you fuel dollar amounts, and you got to make some estimates based on that. So none of them list, here's our pounds of uranium.
Yeah.
Yeah.
I know that you are, Mike, not commenting any companies, but here is a question so you can answer if you think you can answer it. What is your take on the Uranium Royalty and their CEO visiting the Assa mine in Niger?
No comment really. I know Scott well. I like him. I recently had dinner with him at a conference in California. He and his lovely wife, just to have regular dinner and say hi and catch up. But I don't really I don't comment on stuff like that.
Okay. Do you foresee a ban of Chinese uranium, given that they are circumventing the Russian ban?
That's a good question. There's a push the uranium producers of America. I think. You'd like to see, they would like to see it, and I think they do their lobbying. And there's a strong lobby in the, but it's conflicting, right? Because it's David versus Goliath. It's the big guys are the utilities, right? Who don't want they want uranium from everywhere, right? Russia and the enriched uranium, some of them never learn and they'll continue to do what they do and they push back a lot. But the miners, much smaller, but have a strong lobbying effort. So there could be, we're on a committee call at one of the trade groups and, we get updated and there's a push to try and get that. Where it goes, who knows? Again, it falls into the political stuff, and I'm not political. I get that stuff wrong all the time. But when you see how things start out and how they finish, there's no way you could figure out how that stuff would work.
Yeah.
This stuff is nauseating.
Sure. Next question. Do you see more ISR projects developed in the Athabasca Basin beside the Denison Wheeler River?
I guess that we'll know if after Denison's gets going. It's a good question, but I think that will be the guinea pig.
Agreed.
Yeah.
Agreed. Next question. How much impact of BHP selling Olympic Dam production keeps spot price down?
No, it's. I don't think much at all. Actually, their numbers are down a little bit, but and I've seen them come along over time. It's got to remember 8-10 million pounds of uranium. The BHP is they don't even. It's like not even pocket change. It's nothing. So, when it comes out of the ground and they have it, they sell it into the market. there's enough to absorb it. And I actually, my view would be that they're aware of prices having gone up, and if they could sell into a more secure home than just a trader, if they could do it, I think they would do that. So yeah, I don't think they're a menace on the market at all.
Next question: why does the West doesn't have any trading camps like Alashenko in Kazakhstan?
Well, you have Converdyn, where it's kept at, right? So it's stored there in Metropolis, which is owned by Honeywell in Metropolis, Illinois. Port Hope, Ontario, which is owned by Kamico. Those are storage hubs. As far as the traders go, they just work wherever. But Alashenko, that's you're getting into Eastern Europe. You're getting into, you're starting to get into China. You're getting into Kazakhstan. They have their own agendas over there.
Yeah, different story, totally. Mike, two more, I believe. What's your take on U308 consumption per gigawatt for SMR and how it compares to the large reactors?
We don't even
It's
think
a big
about
question.
it. No, it's a good question. It's just something we don't place any real emphasis on. They'll need. You could make an argument that because they need highly enriched uranium, that even though the reactor size is materially smaller, they could need a reasonable amount of uranium on that because it's more enrichment. But again, we don't put it into our modeling. We don't feel as though we need it.
Yeah, Mike, your view on the nuclear for thermal energy, industrial heat, or district heating as a future demand driver for nuclear? What's your take?
I don't have a view.
Okay, I believe that we covered them all. Let me just check. We covered them all. Mike, thank you very much for this.
Always a pleasure, Lucy John. I always enjoy chatting with you.
Thank you.